Ever wondered how a simple piece of paper, a stock, can turn into a fortune or a financial nightmare? Welcome to the world of stock markets, where fortunes are made, lost, and sometimes made again. Firstly, let's unravel what the stock market actually is. Picture a bustling marketplace, but instead of fruits, vegetables, or clothing, this marketplace trades in stocks. Now, these aren't tangible goods, but represent ownership in a company. When you buy a stock, you're actually buying a piece of that company, becoming a shareholder. Companies issue stocks to raise money. They could use this capital to expand, invest in research and development, or pay off debts. In return, you as a shareholder have a claim on part of the company's assets and earnings. But why would you want to own a piece of a company? Well, there are two main ways to make money from stocks. First, if the company does well and its value increases, the price of its stock typically goes up. This means you could sell your stock for more than you paid for it, making a profit. This is called capital appreciation. Second, some companies distribute a portion of their earnings back to shareholders in the form of dividends. However, the stock market isn't just a one-way street to wealth. If the company doesn't perform well, the stock's price could go down, and you could lose part or all of your investment. That's the risk you take. Now you might be thinking, how does one decide which stocks to buy? That's where the analysis comes in. Some investors look at a company's fundamentals, like its earnings, revenue, and cash flow. Others use technical analysis, studying statistical trends gathered from trading activity. And some investors follow the herd, buying or selling based on what everyone else is doing. But remember, no amount of analysis can guarantee a profit. The stock market is influenced by a myriad of factors, from economic indicators to geopolitical events, even investor sentiment and fear. To recap, the stock market is a marketplace for buying and selling ownership in companies. You can make money through capital appreciation and dividends, but there's also a risk of loss. And while analysis can guide your decisions, there are no guarantees in the stock market. So, whether you're eyeing a promising startup or a well-established conglomerate, remember that investing in the stock market is not just about chasing profits. It's about understanding the companies you invest in, the risks involved, and most importantly, your own financial goals and risk tolerance. The world of stocks is complex, but it's also full of opportunities. It's a game of strategy, patience, and sometimes a little bit of luck. So step into the marketplace, arm yourself with knowledge, and let the trading begin.